So, you've decided you want to buy a piece of Amazon. Maybe you're a loyal Prime customer, you use us for work, or you just believe in the company's future. But when you go to actually do it, you're hit with a wall of questions. What's a broker? How much money do I need? Is one share even enough? The world of investing can feel incredibly intimidating, like a private club with its own secret language. What if you click the wrong button and lose all your money? I get it. That fear stops most people from ever getting started. But the truth is, buying your first stock has never been easier or more accessible. This video is your no-nonsense, step-by-step guide. We are going to walk through the entire process together, from opening an account to clicking the buy button. I'll explain the key concepts in plain English, show you exactly what to look for, and help you avoid the common mistakes beginners make. By the end of this, you'll have the knowledge and the confidence to make your first investment in Amazon. Before you even think about placing a trade, the most important step is to choose your platform, which is called an online brokerage. Think of a brokerage as the gateway between you and the stock market. It's an app or a website where you can buy and sell stocks, like Amazon. There are many great options for beginners. Some of the most popular include Fidelity, Charles Schwab, E-Trade, and TD Ameritrade. These are traditional, full-service brokers that offer a huge range of research and tools. Then you have newer, app-based brokers like Robinhood and Webull, which are designed for simplicity and ease of use, often with zero commission fees. So, how do you choose? For a complete beginner, your main considerations should be the user interface, the fees, and a specific feature called fractional shares. You want a platform that is easy to navigate. You want one with zero commission fees for stock trades, which is standard now. And crucially, you want one that offers fractional shares. Amazon's stock price is well over $1,000 per share. Fractional shares allow you to invest a specific dollar amount, say $100, instead of having to buy a full share. This is a game changer for new investors. My recommendation is to start with a well-established, user-friendly platform like Fidelity or Schwab, or if you prefer a very simple mobile experience, Robinhood. Do a little research, pick one, and download the app or go to their website to start the sign-up process. Once you've chosen your broker, the next step is to open and fund your account. The application process is very similar to opening a bank account online. They will ask for your personal information, your name, address, date of birth, and social security number. This is required for tax purposes and is completely standard and secure. You'll also answer questions about your employment, income, and investment experience. Be honest here, it helps the broker understand your financial situation. The most common type of account for a beginner is an individual brokerage account. It's a taxable account that gives you the flexibility to buy and sell stocks whenever you want. Once your application is approved, which can take from a few minutes to a couple of days, you need to fund the account. This is how you get money into your account to actually buy stocks. You can typically link your checking or savings account electronically. This process, called an ACH transfer, is free and usually takes 1 to 3 business days for the money to clear and become available for trading. Some brokers also offer instant deposits for a smaller amount while the rest clears. Now, with money in your account, you're ready for the exciting part, placing your trade. But before you click buy, let us talk about 2 critical decisions: how much to invest and what type of order to use. First, how much? This is a personal decision, but the golden rule of investing is this: never invest money you can't afford to lose. The stock market goes up and down. Only invest cash that you won't need for bills, emergencies, or rent in the foreseeable future. Start small. There is no shame in investing $100 or $200 to get your feet wet. This is where fractional shares are so powerful. You don't need $3,000 to buy a whole Amazon share. You can own a piece of it for whatever amount you're comfortable with. Second, you need to understand order types. When you go to buy Amazon, you'll see a ticket that says AMZN, which is its stock ticker symbol. You'll enter the number of shares or the dollar amount you want to invest. Then, you'll be asked to choose an order type. For a beginner, you really only need to know about two. A market order is an instruction to buy the stock immediately at the best available current market price. It's fast and simple, but the price you pay might be a few cents different from what you saw because prices fluctuate by the second. A limit order gives you more control. You set the maximum price you are willing to pay per share. The trade will only execute if the stock is available at your price or lower. This protects you from buying during a sudden price spike. For your first trade, a market order is perfectly fine for a large, stable company like Amazon. Let's pause for a moment and talk about the why behind your investment. Why Amazon? This is the part that separates an investor from a gambler. Before you put your hard-earned money into any company, you should have a basic understanding of what you're buying. Amazon is much more than an online store. It has three major pillars. First, there's North America and international e-commerce, the retail side we all know. Second, and incredibly important, is Amazon Web Services, or AWS, which is its cloud computing division. AWS is a profit powerhouse and provides the backbone for a huge portion of the internet. Third, there's advertising and subscription services like Prime. When you invest in Amazon, you're investing in all of these businesses. You're betting that the company as a whole will continue to grow and become more valuable over time. This is called long-term investing. You're not trying to make a quick buck by buying today and selling tomorrow. You're making a bet on the company's future over the next 5, 10, or 20 years. This mindset is crucial for weathering the inevitable ups and downs of the stock market. After you place your buy order, you'll receive a confirmation almost instantly. Congratulations, you are now a shareholder of Amazon. You own a small, fractional piece of one of the largest companies in the world. Your brokerage account will show your position in AMZN, including the number of fractional shares you own, the current value, and your profit or loss. It is important to know that the value of your investment will change every single day the market is open. Don't panic when you see it go down $10 one day. This is normal market volatility. The key to long-term investing is to not make emotional decisions based on short-term price movements. Set it and forget it. Check in on your investment periodically, but avoid the temptation to constantly watch the ticker. Consider setting up automatic investments, where you invest a fixed amount of money into Amazon every month, a strategy called dollar cost averaging, which can help smooth out your purchase price over time. Before we finish, I have to end with a crucial disclaimer. I am not a licensed financial advisor, and this is not financial advice. Investing in the stock market always involves risk, including the potential loss of principal. The value of your investment in Amazon, or any stock, will fluctuate and is not guaranteed. Past performance is not an indicator of future results. You should always do your own research and consider your personal financial situation and risk tolerance before making any investment decisions. Your call to action is this: if you're ready to start, choose a broker today and open that account. Take the first step. Even if you only fund it with a small amount, you've overcome the biggest hurdle, which is getting started. The world of investing is now at your fingertips. Thanks for watching.